everything in the end will be better than we expected. This is Tyson Ray, financial advisor at Form Wealth Advisors, where we exist to help make life better for our clients and those in our community. For the month of March, as we came into the end, the market squeaked out a gain to finish up for the month. But none of that matters, because what matters to everybody right now is that in the month of March, for the first time since the financial crisis, we had bank failures. Why did we have some bank failures? It's because rising interest rates put stress on literally everything. Partly it puts stress on banks because you have to pay interest now on deposits, and you have to pay the interest on debts are higher. And at the end of the day, this rising interest rate environment put stress on banks, and some banks failed because they weren't managing the bank well. History shows that rising interest rates causes the strong to survive, and it's acting as a purifier, and it flushed out some banks that, quite frankly, should have been caught doing some things that they were doing or should have been shut down and now are. Let's talk about your investments. For about the last 12 months, it should feel like your investments have been doing nothing. They've up a little bit, they're down a little bit, but they're really just going sideways. And the reason why is the markets are range bound, trying to digest when is the Fed going to be done raising interest rates, trying to digest what just happened with the banks, trying to digest into the future what no one's talking about that's going to be the big deal going into the summer is the government having to deal with this debt ceiling that we're coming up against. And are we going to shut down our government? Are we going to default on our debt? And that's an uncertainty that lays out in front of us. In the next couple months, we're going to have Ukraine's war coming back online as it thaws over there and they can go back to the war that they have. Although now it's going to be a little different from last year because Ukraine has been more equipped with more weapons of war. And so we're going to deal with all those headlines and that uncertainty and what can come from that. And so there's just a lot of unknowns that are causing these markets to be quite volatile and really trying to find which way they want to go. And so what do you need to know about that? What you need to know is, and I've been saying it for a while, 2022 did not give us a positive return on our investments. And so far into 2023, we're not getting that positive return either. Patience often creates profits and rewards for those that utilize patience. People that spend but didn't make a profit are starting to spend into their principal, and principal can't be made back once spent. For those of you that aren't retired, or for those of you that have extra, this is the opportunity that we're looking to take advantage of in the form of dollar cost averaging in the next couple weeks through the rest of this year through this uncertainty. Because at some point, the war in Ukraine will resolve itself. At some point, Washington's going to figure out its little mess with the debt ceiling. At some point, pretty soon here, maybe even this summer, the Fed's going to pause interest rates, and we're going to see if inflation comes back down. And in the end, as I stated in the beginning, I think the best times are still ahead of us. I think things are actually better than we think. We just have some of these uncertainties we need to navigate. Stewardship is going without, and contentment comes from what we already have. And this is just one of these opportunities that I myself would rather take money and forego instant gratification and make wise investments, or let my investments continue to ride this out, because the goal of any long-term investor, if they are going to ever sell any of their investments, it's to try and sell those shares at the highest values possible. And we're not at the highest values from January of last year. And I don't think we're going to be at those values in the next 6 to 12 months. So I say wait. That's the best advice I can give you, and I appreciate that. May not be what some of you want to hear, but that's my job. The purpose of these up or down videos is to try and bring a little understanding about what you should be doing with your long-term investments based on what is going on. And so this is Tyson Ray, financial advisor at Form Wealth Advisors, where we exist to help make life better for our clients and those in our community.